Before the opening bell, U.S. futures in full rebound mode. This after they continued to show downward momentum yesterday and sank to 13-year lows. This all as 85% of S&P 500 constituents traded lower or unchanged the previous session to kick off the week. Now, after hours, Tesla in the headlines, halting output at its China-Shanghai plant due to supply issues. This according to a report from Reuters. Pfizer also agreeing to buy Biohaven Pharmaceuticals for $11.6 billion. Philip Morris International in advanced talks regarding an acquisition of its peer Swedish match. And Peloton Interactive tumbling before the bell on disappointing sales figures. Now, there's no major earnings expected today, but on the economic docket before the opening bell, 6 a.m., the NFIB Business Outlook Index, and then will be followed by the U.S. Red Book. Taking a look now at the markets, the S&P 500, that's where we begin. That sees an expected rebound, and that's in focus. The relative strength index calls for a bounce, so long positions above 39.62 are favored with targets at 40.97 and 41.52 in extension. The NASDAQ, that happens to be turning up, with the Dow Jones, that's turning up as well. Now, U.S. stocks are in full rally mode this Tuesday morning, right? Okay. Now, U.S. stocks, they're in full rally mode right behind me here at the New York Stock Exchange. I can do it again. Now, U.S. stocks are rallying this Tuesday morning, suggesting a modest recovery at the open from the previous day's rout that drove the S&P 500 to a one-year low. Investors also awaiting data on U.S. consumer inflation on Wednesday that could help in determining how aggressive the U.S. Federal Reserve will raise its rates. Cryptocurrencies have also suffered a similar fate in recent weeks as Bitcoin dropped briefly below $30,000 Tuesday, hitting... You know what? Let's do this right. Ladies and gentlemen, it's me, James Sweeney, coming at you this Tuesday morning from the balcony above the floor of the New York Stock Exchange. And you know what? I'm feeling good. I've got a crisp shirt on. I've got a fitted suit on. I've been all over television. I've been all over the place, walking everywhere. And yeah, the weather's warming up. And I hope the markets get to warm up as well. It's been a bit of a... Ladies and gentlemen, it's me, James Sweeney, coming at you this Tuesday morning from the balcony above the floor of the New York Stock Exchange. And I'm sure you can tell I'm feeling good today. I'm feeling really good. Got a crisp shirt on. It's warm outside. Wall Street is, well, it's buzzing, but it's buzzing more with tourists, but it's still buzzing. And you know what? Right now, there's a little bit of market positivity this morning. Just this morning, we'll see if it carries over into the afternoon. So you know what? Let's take a look now to see how the markets are shaping up to start off the second trading session of the week, right here at the big board. 5, 4, 3, 2, 1. Now, U.S. stocks, they're rallying this Tuesday, suggesting a modest recovery at the open from the previous day's rout that drove the S&P 500 to a one-year low. At the same time, investors are awaiting data on U.S. consumer inflation tomorrow that could be helpful in determining how aggressive the U.S. Federal Reserve will raise its interest rates. Cryptocurrencies have also suffered a similar fate in recent weeks, Bitcoin dropping briefly below $30,000 on Tuesday, hitting its lowest level since last July as investors cash out. The price last down 5.4% at $31,809, having hit an overnight low of $29,994. And lastly, some advice. Let's go New York sports history. Now, U.S. stocks, they continue to seesaw this Tuesday afternoon right behind me here at the New York Stock Exchange. And the Dow Jones right now on pace to slip for a fourth day as the major averages continue to struggle to 5, 4, 3, 2, 1. Now, U.S. stocks continue to seesaw right behind me here at the New York Stock Exchange this Tuesday afternoon as the Dow Jones continue to slip for what will likely be the fourth day in the red as the major averages here in the United States continue to struggle to bounce back from a bout of heavy selling. The market continuing to struggle to choose a direction today in erratic trade that saw the major averages waver between gains and losses. In fact, at one point, the Dow Jones jumped more than 500 points intraday, but later it was down as much as 350 points. And that's where it stands approaching the closing bell. Meanwhile, in the Forex market, the euro-dollar is where we begin. Intraday, that's trading under pressure. The British pound-US dollar pair also trading under pressure, while the US dollar-Japanese yen pair sees its key resistance 130.65. Now, what's in focus today is the US dollar-Canadian dollar pair. That's under pressure as the pair is on the downside below the resistance at 130.35 and below its 20 and 50 period moving averages, which have validated a bearish cross. Short positions below 130.35 are favored with targets at 129.40 and 129.05 in extension. The Bitcoin dollar sees the upside prevail as long as 30,800 is the support. The pivot point 30,800, and gold sees its key resistance 1866. Gold capped by the horizontal resistance at that figure and challenging its 20-period moving averages. So short positions below 1866 are favored with targets at 1851 and 1843 in extension. This while silver, that sees its key resistance 2210 a troy ounce. Don't forget to follow Trading Central on Twitter and other social media networks for all of your Forex market updates. And for Trading Central Web TV on this Tuesday afternoon, I'm James Swinney. So let's talk Peloton, because right now as I speak, Peloton is trading at an all-time low. But in truth, Peloton has to It's time to talk the markets. It's time to talk what's in the headlines. And guess what? It's all about Peloton today. And in truth, yes, Peloton has hit an all-time low. It continues to blame outside exterior forces. 5, 4, 3, 2, 1. It's time to talk the market headliners, and today it's all about Peloton, which, by the way, if you didn't know, if you're living under a rock, it's trading at an all-time low, and Peloton may be blaming exterior forces, but it should also be blaming itself, because sure, it's easy for Peloton to point the finger and blame the post-COVID opening world. Post-COVID opening world, because that's an easy way out. The weather is nice, people want to begin to talk and meet in person again, and let's also be real here. I hate this. Why? Why does it do that? Do you know why?